Hello students, welcome to the my YouTube channel of Sun Academy. Today we are going to understand some of the journal entries of the chapter single entry in journal accounts, which will help you to post these entries into the accounts easily so that you may not find any difficulty. Now first entry is when credit sale is done, so you have to write debtors account debit to sales account, and according to that you have to post this entry. Second is when bill receivable dishonored. When bill receivable is dishonored, debtors account will be debited and bills receivable account will be credited. Third is when check of debtor dishonors. So debtors account will be debited and bank account will be credited. Then after is cash expenses on behalf of debtor. So debtors account will be debited and bank account will be credited. Fifth is interest charged to debtor. So debtors account will be debited and profit and loss account will be credited. Sixth is bill receivable endorsed to creditor dishonored. When bill receivable is endorsed to creditor, that means it is given to a creditor and it is dishonored. So debtor again becomes our debtor and creditor becomes again our creditor. That's why debtors account is debited and creditors account is credited. Seventh entry is cash received from debtors. So cash and bank account will be debited to debtors account. If check is received, then bank account will be debited and debtors account will be credited, and check must be deposited in the bank. Then after eighth entry is discount allowed to debtors. Profit and loss account will be debited and debtors account will be credited, or you may debit discount account to debtors account, and then after profit and loss account will be debited and discount account will be credited. Ninth is bill accepted by debtors. So bills receivable account will be debited and debtors account will be credited. Goods returned by debtors, so sales return account debited to debtors account. Bad debts occurs, bad debts account to debtors account. Allowance is allowed to debtors, so allowance account debited to debtors account. Cash received of bill receivable, cash account debit to bills receivable account. Discount allowed on bill receivable, discount on bill receivable account debit to bill receivable account. Bill endorsed to creditors. So creditors account will be debited. Here it is written wrong. Creditors account will be debited and bill receivable account will be credited. Creditors account debit to bills receivable account. Then after it is 16th number entry, cash paid to creditors. Creditors account will be debited and cash account will be credited. Check paid to creditor, creditors account will be debited and bank account will be credited. Discount received from creditor, so creditors account debit to discount account, or you may directly write it to the profit and loss account. Bills payable accepted or signed, so creditors account debit to bills payable account. Purchase return, creditors account debited to purchase return account. This will be written on the debit side of the trading account. Allowance by creditors, so creditors to allowance account, you may write it to the debit of the profit and loss account directly. Credit purchase, when credit purchase is done, so purchase account is debited and creditors account is credited. When bills payable is dishonored, so bills payable account will be debited and creditors account will be credited, because creditors will again become our creditors. So this was 23rd number entry. Then after it comes 24th number entry, which is interest charged by creditors. So interest account debit or profit and loss account debit to creditors account. Cash paid for bills payable. So bills payable account debit to cash account, because cash goes out and who is the receiver? Bills payable account. You may find that all the rules of debit and credit you learnt in the 11th are followed. Bad debts recovered, so entry will be cash account debit to bad debts recovered account. You may directly write it to the credit side of the profit and loss account. Capital brought in cash, so cash account debit to capital account. If capital is withdrawn, then entry will be reversed, capital account will be debited and cash account will be credited. Drawings by honor, so drawings account will be debited to cash account. If owner has withdrawn some goods, then goods account will be credited. If owner has withdrawn through bank, then bank account will be credited. Then after, if there is cash sale, then entry will be cash account to sales account. If there is a cash purchase, then entry will be purchase account to cash account. Expense, any expense paid in cash, that expense account will be debited and cash account will be credited. If expense is wages, then you have to write it on the debit side of the trading account. If expense are related to profit and loss account, for example stationery expense, salary, rent, insurance premium, then all those expenses will be written on the debit side of the profit and loss account and cash account will be credited. Then after comes 32nd entry, assets purchased, so asset to cash account. Assets sold, cash account to asset account. Sundry income in cash, cash to sundry income account. So if you follow these 34 entry, then you will be easily attempt a whole sum of single entry.